Good morning. Welcome to Morning Call. Difficult global morning that we wake up to today. Was supposed to be the real budget day and all eyes would have been fixed on that local event, but I guess global equity markets have stolen the thunder. Big sell-off in the US equities, big spike in volatility. Though to be fair, Asia's not quite reeling under that pressure this morning, so at least we may get off with a light cut this morning and then take it from there. Mitali, hi, good morning.
Hi, Udayan. Morning. This happened to us a couple of budgets back when we woke up in the morning to this kind of market. But you can sense the unease, or you have sensed the unease on the screen these last few days globally. Yeah,
it's been coming, for one reason or the other. But when markets want to correct, they latch on to various kinds of things. So it started off with that FOMC minutes talking about QE withdrawal or premature withdrawal of quantitative easing. And then it was something else, European PMI data, and now it's Italian elections. So, when markets are overextended on the way up, they'll latch on to anything. But the very sharp spike with the CBOE VIX overnight, 35% jump, something that we haven't seen in years now, that told you that the markets are probably priming themselves for a volatile ride now. We may not have a straight line correction. It may or may not be of the magnitude that people have been fearing, but the calm and complacent kind of trajectory of the market is about to be shaken up, has already started being shaken up. So I guess the next few weeks will belong to this kind of volatility, and which side of it the global market re-emerges will determine and shape how much of a correction, which we've started a few weeks back, will be par for the course for us. So this morning, every indicator that you look at in terms of measuring a risk off is telling you that risk on is not prevalent right now, whether it's currencies, whether it's the VIX, whether it's the dollar, which is marching towards 82. So one can only hope that over the next couple of days global markets stabilize somewhat, because if we do get caught in the vortex of some serious global volatility, then the budget might easily be relegated to a sideshow.
Also that it seems to be political in nature, something the markets are usually nervous about when it's emanating from Europe. Today is the real budget day, and there are expectations that this one is going to be something like the union budget, but a lot of good work has already gotten done through the year from the railways point of view.
Yeah, I think the big tariff hikes have already come in, so to expect much more to come in this budget document is probably expecting too much. But I think this time around people are expecting a few things because the general expectation is that we'll see this week being a reformist kind of week, and therefore the railway budget might just set the tone for the union budget by doing a couple of things which people do not expect. So in that there is a little bit of expectation. Otherwise this event is per se an anachronism. It should have been disbanded long back. We don't need to have a railway budget. To put out a $10–12 billion document, you don't have to have a separate budget. It could be a 5-minute addition to the union budget, which the finance minister endorses and then reads out. That should be good enough. So I don't see what's the big fuss about having a separate. It harks back to the British days, and we've just carried on with it without making a change in it. So hopefully there will be a few positive things. Hopefully the plan outlay, given that railway collections, or this time the revenues have been quite short of expectations, the plan outlay will not be significantly higher, because if it is, then it puts further strain on the union budget, and hopefully they will do something like selling some of the unused land which the railways owns to cover up for some of that deficit. So maybe some small tinkering on the margin. In terms of railway stocks, this time the market's been far wiser than previous years. I was looking at the list of railway stocks, and they've all sold off between 10 and 15% in the last fortnight. So this time there is no pre-railway budget rally as such, because I think the experience of the last few years where stocks would go up and then suddenly collapse post the budget is not going to play out. So you might see one or two stocks reacting a little bit to announcement, but it's a one-day affair. I don't think the railway budget really matters so much, and anyway half of these names are absolutely dud stocks to begin with.
In danger now, the index, Udayan, after having broken its range, settling around 58.50, now it looks like we may have some downside risk over the next few weeks.
Well, had it not been for the budget, maybe the market would have broken down even more severely from here. But I think the budget is one event which is acting like a magnet, supportive magnet on one side, so that it's cushioning any major downside, because people have this idea that on Thursday, and maybe correctly, that Thursday the market will go up, and therefore right now it's not the time to sell ahead of that event. So you're grinding and grinding around that lower end of the trading range, which is broadly, or support I should call it, not range, 5800 to 5850. So today, during the course of the morning, we might revisit that area of 5800, 5820, which has held out in the last fall. And I think a decisive break of that may not happen immediately because people have this event in mind. But we were discussing a few days back that the post-budget outcome, even if it's a good budget, has to be measured by where the clock is starting off. And it seems increasingly, because of the global setup, that the clock will not start at 6,000 but a whole lot lower. So if you get into the budget at 5800, 5850 and not much higher than that, then even a good budget will probably struggle to take it past that recent high of 6100 plus. So say the budget is good and you get a 5% rally in the market post the budget immediately over a couple of sessions. Even then, you wouldn't have cleared that 6100 hump. And I think a lot of supply may yet come in, particularly if global markets remain this volatile, around that area of 6,000 to 6,100, and then the market might resume its downside unless the budget is the stuff of spectacular stuff. So I think we're setting ourselves up into a difficult corner out here with the way flows and global situation has panned out. A budget, regardless of the budget, but the budget, at least in the near term, the next couple of days, may ensure that the fall is not, at least in the large caps, not catastrophic in nature.
Some disturbing developments in the broader market though yesterday.
Yeah, I mean, you know what's going on, I think, is that some operators are going bust. It was coming for a long time. I mean, the kind of mid-cap performance that we've seen over the last 3 or 4 weeks, it was just a matter of time before some of these accidents started cropping up. Because, you know, some of these operators play around in 8-10 stocks. Some of their stocks have corrected 20-25%. That puts an enormous strain or funding strain on them. And I don't think yesterday's sell-off in some of the stocks which are flashing on the screen have much to do with any institutional selling. I know there was one fund which sold some 13 lakh shares of core, but that is not why the stock collapsed 60%. I think it is probably 1 or 2 or 3 operators who were playing around in these stocks, who could not cough up money, ran into severe funding problems, and these stocks were just sold off at distressed valuations. Every time this happens, I mean, you feel very jumpy at the pit of your stomach on what's going on in the small cap, mid cap universe. But yesterday it was unfortunate because it came at a time when the market was just attempting some kind of a move, and then the mood got spoiled completely by these 5 or 6 stocks which collapsed. So I think mid caps remain in a difficult place, and there is just no sign that any of the retail punters are finding any energy to go and take positions on them before the budget.